Self-directed IRA risks. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. In today's video, I want to discuss and hopefully dispel any concerns people have about the risks involved in a self-directed IRA. So this is it. The main risk of using your IRA to do an alternative asset investment, because that is what a self-directed IRA is. Simply, you as the retirement account holder have the ability to do alternative asset investments that are allowed, permitted by the tax code in your retirement account. And the advantage is the income and gains from that investment would generally flow back to your IRA without tax. So what are the risks? And I've been doing this 14 years. Prior to that, I was a tax lawyer at some of the largest law firms in the world for over 8 years. So I've seen it all. I've seen small risks and big risks. And it all comes down to you. Because again, the word is self-directed. So you have to know yourself, okay? You have to know what you're investing. IRA Financial is a self-directed IRA custodian. We do not offer investment advice. We don't sell products, which I think is important because we have no conflict of interest with our clients. We want all our clients to make as much money as possible. It's not a zero-sum game. All IRA Financial clients can have millions of dollars in their IRA. There's no limitations. The only limitations is you. So you have to know the risks and reward. What are the risks? The first is obviously fraud, right? You invest in your neighbor's fund and it turns out your neighbor was a bad actor and he or she took the money and ran. So obviously when you buy stock, whether it's Apple or Tesla or even Silicon Valley Bank, there's no investment that has zero risk, okay? The SEC would want you to think that there's less risks involved in publicly traded securities because they're regulating it, auditing it, there's quarterly reports, there's disclosures, but that's not always the case, as we know from Lehman Brothers, Bear Stearns, Silicon Valley Bank, and Enron, not hundreds, if not thousands of other small cap companies that have had fraudulent issues, right? The Department of Justice recently just sued Apple. So there's risks everywhere, right? But the nice thing with the self-directed IRA is the risk's on you because you're in control of the money. So you always have to do due diligence, no matter if you're buying Apple stock or if you're investing in a small privately held fund. Do your diligence. Can you assume the risk, right? If you don't want to take risk, you probably shouldn't buy altcoins, right? Maybe you should be buying fixed income or municipal bonds or other things that are a little bit more secure and stable. But that is the beauty of America. That's the beauty of the self-directed industry, is that it's up to you, not up to the government what you can and cannot do. It's up to you. The IRS says only 3 things you can't do with an IRA: life insurance, collectibles like art, and any transaction that involves yourself personally or your lineal descendants, your parents, your children, spouse, daughter-in-law, son-in-law, or any entities controlled by such persons, you can't transact with. Otherwise, you can do it. Okay, whether it's real estate or cryptos or gold, investment funds, credit funds, hard money loans, real estate funds, founder stock, you can do it. So it's all up to you. And you have to know yourself and know what you want and do not want in terms of risk factor in your retirement account. So to conclude, is doing a self-directed IRA risky? No. Okay, the IRS has no audit rules specific for self-directed IRAs, right? In fact, Schwab says they have a self-directed IRA. It's not a true self-directed IRA because they won't let you do alternative asset investments they don't sell. But as long as you're not violating the prohibited transaction rules, doing life insurance or collectibles, you can do it. Now, whether your investment turns out positive or negative, that's up to you. And that is the beauty of America, right? You have to take charge of your own future. So you have to know yourself, you have to do your diligence, analyze risk versus reward, and then you can make the determination whether that investment is too risky or is a appropriate and suitable investment for your IRA. That's it for today's video. I hope you enjoyed it. If you have questions about self-directed IRAs, risks, investments, structuring, give us a call. We have an incredible team of tax specialists that would love to assist you. If you want to learn more about what you can and cannot do with a self-directed IRA, check out the thousands of videos I've done, the podcasts, or blogs. And you can check it out all on our website at irafinancialgroup.com. You can get started by doing a quick account setup or simply download our app. So thanks again. for watching, and I look forward to seeing everyone, all of you again on the next video. Thanks.